Welcome to Moving Iron with Casey Seymour and Greg Peterson, the podcast for anyone and everyone involved and interested in the business of ag equipment. If you want to understand what trends and market forces are impacting the price of your iron, you've come to the right place. Buckle up, it's time to move some iron.
Hello and welcome to Moving Iron Podcast. This is the Moving Iron Podcast. It's brought to you by John Deere. I've got Greg Machinery Pete Peterson here to talk about what's going on in the auction space. Greg, how you doing this morning?
Pretty good, Casey. How are you?
Doing all right, man. Doing okay. On location here, we got the Machinery Pete sales team together. We're going to have a little run down here in Chicago and try to get just to do our yearly meeting here and talk about things going on. So it's that time of the year. Plenty of stuff happening out there.
Yeah, there is. Getting to planning time here, upper Midwest, and auction season's still busy. So yeah, it's lots happening.
Lots happening for sure. All right, let's talk about this a little bit. So I saw a post you made yesterday. We kind of keep the same theme of hay equipment going on that we've been talking about here the last couple of times. You had a sale coming up. I think it was in Colorado, eastern Colorado somewhere. They had a couple New Holland, square bell movers and some of those Stingers, big round bell, big square bell movers out there. And the Stingers to me have always been an interesting machine out there just because of what they are, and it shows you the amount of if you're in a big custom production area, those Stingers make it pretty handy when you start moving bells around. So I guess as you're watching that market, what are you seeing out there, Greg?
Well, I'll be watching that sale. I think it ends today. Our friends at Auctioneer Miller and Associates out in Brush, Colorado, have a 2-day consignment sale, and I think that Stinger 6500 sells today. Also an old, I say old, but I'm old, I guess, a New Holland 1049 bale wagon. Those are always interesting to see. I guess maybe earlier version of the custom guys, but those big dollar items, those Stingers are always interesting. Whenever I see them sold at auction, to me it's like, whoa, look at that, look at the price on that thing. I sort of lose track a little bit what they go for retail or brand new, but you just don't see that many of them flow through the auction market. So it'll be interesting today to see there out in Colorado what they bring.
Yep, very niche piece of equipment, and those niche pieces of equipment typically have one or two fates ahead of them. Either they bring a shockingly huge amount of money or nobody wants to buy them. And it all depends on where you're at. But this time of the year, I feel like they're going to have a pretty good run, especially price of hay is starting to creep a little bit just because of the drought situation we're seeing creep in the area. So it'd be nice.
Yeah, I think you're right. And generally, like we've talked about last couple of weeks, Casey, good used hay equipment we've been seeing around, whether it's round balers or large squares, even we've seen some strong pricing. So good used hay equipment's been it's been trending in a solid direction.
Yep, for sure. You're talking about a sale you saw out in Ohio before we got it going, and there were some records you saw set out there.
Yeah, Saturday, my friends at Kiko Auctions, kind of in the northeast part of Ohio where they have most of their sales. This one was in Diamond, Ohio, farm auction. And if you love blue equipment, blue tractors, holy smokes, did they have some beauties on that one, Casey. So just a couple of highlights. They had a 2013 New Holland T7 260, low hours, 1,226 hours on it. That brought 152, and that's a record by $19,500.
Oh, wow.
Previous high was 132.5. That was back in May of 22, and as we've talked often, 22 was kind of the top of the, maybe the hottest.
That's impressive that it topped that back in 22. I mean, that's
right.
Not by that much,
Right, yeah, and that one in 22 was out of Vermont, Charleston, Vermont. I don't see a ton of auction prices out of Vermont. Got some maple syrup wire up there, I guess. Right. But that one back in 22, that one had 1,660 hours on it, 18 model, about 132.5. So again, a record on the T7 260. They also set a record on a 15 model T5 115 with a loader. And that thing had, I'm trying to remember how many hours on it, 765 hours, about $75,000. Previous high auction price was $68,000, again, back in February of 22. Wow. No surprise there. They also set almost a record on a 12 model New Holland T6070, no loader, but they had two of them. One had 472 hours. That brought $90,000. I think that's the third highest auction price on a T6070 with but again, similar pattern here, whether it's blue, green, orange, whatever. If you got a few years on them, low hours, nice condition, those prices are very strong right now. The other record they set on Saturday in Diamond, Ohio, Casey, was on a blue planner, Kinsey 3505 816. It was like new, a 24 model, only had 172 acres through it. I brought 100K. Previous high hard cash auction price was 82.5. That was back December 30th of this past year. Our friends in St. Anne, Illinois, their big consignment sale, they sold one for 82.5. So again, Kiko does a really good job. They market all over the place, and they had some real strong ponies to ride, and they sold the heck out of them Saturday in Diamond, Ohio.
It's funny that the loader tractors brought as much as they did, because if you look around and talk to some dealerships, that's the one thing a lot of guys have brought up to me over the last 3 or 4 months, is that the lag in loader tractors that were going on, and what that looked like, because that was one of those things that if you looked at where those things play into at, the biggest situation they were running into was, you would think that with the cattle market the way it was, and as much as healthy as the cattle market's been, that would be something that was more people would be out looking for it. And the dealership wise, it's not there. I think if you look at the situation we're in right now, this is typical as you come out of these dips in the marketplace. The auction values rebound a lot faster than the retail values do. And auction, the things at auction typically have a higher demand signal than what you see on the lot. Because when I was working at the dealership, I'd be like, man, I've got 5 just like that sitting on my lot that I would have sold to you for $10,000 less than you bought that one for at the auction. But no one's coming to the table. And I think that's just where we're at right now in the marketplace.
Yeah, well, again, it's interesting. Focusing on the auction side of things, good used condition loader tractors have been solid, just really solid on the auction side. And that's common, that scenario you described there. And my family comes from the dealer side. My dad was 3rd gen. So yeah, sometimes you scratch your head. But for example, that sale Saturday, that's a farm retirement sale. So when you have, that guy had super condition low hour stuff with a bit of age on it. So that, that T5 115 with a loader, it's a 50 mil, that's 10 years old. And people that have been following me for years know I talk about that 10-year-old mark. I call it the magic limbo bar. I'm very not flexible, Casey. I can't get under a limbo bar very good.
You and me both.
But low hour plus 10 years old, it equals magic dust on the auction market. It's like a Pavlovian bell goes off, bing, and everyone goes, I want that one. Because, what's a new tractor that horsepower cost? And even though a dealer right down the road has, 4 to 6 of them sitting there, that's, auctions are human events, and
a lot of emotion there.
A lot of emotion. But obviously this guy had very good condition stuff. And a couple other interesting tractors sort of in that same category from last week. If we go to Wisconsin, last Thursday in Oconomowoc, my friends at George Auction Service had a nice farm sale. They had, again, a little bit older, but good condition. They had a 07 John Deere 7730. Good hours on it, not crazy low, 3,775 hours. No loader. They brought 87 1/4, and that's the 4th highest auction price ever on a 7730 with over 3,500 hours. So I thought that was pretty good. And for you 55 series fans out there, they had a sweet 89 model 4455 mechanical front, 4,551 hours. That sold for $78,000. Which again, if you hop into machinerypete.com and go into the auction prices and use our filters, you're going to find that $78,000, that's the 4th highest auction price ever on a 4455 with over 4,000 hours. So in the current environment we're in, when belts are still being tightened, you find these really good conditioned, doesn't have to be tractors, it can be whatever, but with a bit of age on them like that, it just shows you that the buyer demand is there.
Yeah, for sure. And you see it creeping up every day, which kind of goes back to the light at the end of the tunnel we've been talking about here with the economy. It feels like they're starting to get the flywheel turning slowly but surely, and then things are going to start going out. A lot of stuff that we see happen right now, tariffs and those kind of things, and it's scaring the market pretty hard. But if you look at what's going on on the ag side, it feels like there's some optimism out there.
Yeah, and I think a little bit what we're seeing too, it's just playing out right in front of our eyes. We're all experiencing it, the uncertainty in the wider economy with the tariffs, and things will shake out as they shake out. But um, in theory, sitting there looking at those implications, the cost of new whatever, cost of a new vehicle, cost of new, whatever, go down to Ace Hardware, everything's
Yeah.
potentially going to go up. So it's been interesting to me following across media. It's one of the things my dad taught me eons ago when I started. He said, keep your head on a swivel. So I try to read outside of our area, outside of agriculture, just to get a handle on things. So, Wall Street Journal reports, stuff like that, Reuters. But there's a theme right now, used whatever, basically the demand is going up. Because people are right or wrong, people are anticipating, cost of new is going to go up another notch. And of course, in the ag sector, we've had recent history with the cost of new really ratcheting through that supply chain mess. So farmers are very sensitive to the cost of new going up. So it drives back again, like that sale in Ohio Saturday with, here's a 10-year-old T5 115 with hardly any hours on it, sweet condition, A+. And you're not surprising, you see those premium prices.
Yep, for sure. And that's that another factor too, I think people have gotten used to more so, especially coming out of COVID, is that the price of used goes up as the new pieces come out. And I've always talked about that 1 to 3 year old stuff is really the one that gets that group of equipment really gets affected by what the price of new costs. And once you get past 3 years, that 4 year 4, year 5 from new is kind of a Netherland, right? I mean, you don't really for sure what it's going to do, but once you get on the other side of the 5 years, that's a different market in itself, right? Like
totally.
You talked about, you know what I mean? That market. Then you start looking at, you're trading hours at that point, right? And folks are looking at the situation, the piece of equipment, where those things play in at, and you get that one-off oddity, that 7-year-old piece of equipment that's got 700 hours on it or something like that. Those machines like that are obviously, like you said, they're kind of a unicorn type of approach. But when you're looking at on the tractor side of it, when you get to that 3,500 hour, basically from 1,500 hours to 3,500 hours, that's kind of that sweet spot, right? And that's when you start getting into that 5-year-old, 6-year-old, 7-year-old, 8-year-old tractor, a whole different market. We talk about this, and Aaron Fennell and I talk about this a lot too, where you look at that 1 to 3-year-old stuff as, when that stuff's really coming off the market and people are buying a lot, there's typically some real strong strength on the row crop side of the marketplace, right?
Right.
Cattle or something like that. When you get on the other side of 5 years, and that stuff is stuff that's moving, typically you're in a situation you're in right now where the economy is not as strong as it should be. And a lot of producers are taking a look at, all right, I've got this much equity, I can go out and do these things. And it comes back to the banker conversation, but the banker's going to let you do and not do and make you feel good on the inside. But typically it's, I've got enough to either make the down payment with equity, or I have so much equity in this piece that when I get to this newer piece, my cash position, my debt to asset ratio, those kind of things they're similar, right? And the banker likes that. And I think that's where we're starting to see that move. And that's what some of the stuff you've talked about, that's where that strength in the market comes from.
Yeah. And again, just think back when I said that magic limbo bar, 10 years old, that's 35 years I've been tracking this stuff. So it's, that's held through good times and bad. It's accentuated when times are more difficult, like right now. But what you just talked about, Casey, it's really important, I think, for people to think about that, that maybe that 3 to 7 year old range stuff. I had a guy on Facebook ask me the other day, he said, Pete, we're looking at what deal. It was a John Deere Model Series tractor. I can't remember the specific model number, but he was asking me where my best value is on the age range. And, our data kind of screams it. It's that 3 to 7 year old, because again, think of that magic limbo bar being at 10 years old. So get yourself a low hour 4 to 5 year old one right now, which, our dealer partners maybe have, still a few good ones available, or at auction, whatever. And, that we don't see quite as many, auction prices ring the bell record wise in that age range.
Right.
But they get a little older and then, then they do. So why not be proactive and be an aggressive buyer in that
Yep.
4, 5, 6-year-old range? Get yourself a low-houred one, especially right now when people are pulling back. And then guess what? When in a few years you're going to have that low-hour 10-year-old one that if you want to trade it or sell it privately on machinerypete.com or whatever, then you've got that magic dust that everybody wants.
Yep. Yeah. And I think that's the rule of thumb that I'd always, to anyone out there looking at trading a piece of equipment, or looking at a piece of equipment is what's your threshold? Where do you feel comfortable? If you're buying a used piece of equipment, where do you feel comfortable at hour wise? Obviously condition, those kind of things all play into that. But if you're you know what, I want a 1-year-old machine with 250 hours on it, because I'm going to go out and run it for the next 5 years and put another 1,000 hours on it or whatever that is. Or, you know what, I've got a 7,000 hour machine. I like getting up to that 8,000 hours, and I want to go back in time, you know, to 2,500 hours or 3,500 hours or whatever it is, because I'm going to put X number of hours on it a year to get to my certain trade cycle. Once you understand that, once you feel good about what those machines look like, then you can start looking at what's the best move for me to make when I start looking at this piece of equipment to come in on trade, right? There's certain machines that you need to take back to the dealership and trade them in. There's some machines you can take a hard look at and say, you know what, hey, this is a strong auction market, or hey, this is a strong dealer, private sell type of thing. Those are the kind of situations you're looking at. And I think what you talked about, when you get past that 5 to 7 year old piece of equipment, depending on the hours that you have on it, those machines sell good, whether they're sitting on the lot or sitting on your yard, whatever that is. Those machines are going to have a good opportunity to sell and have some equilibrium in the price, whether you're talking dealer, you're talking private sale, auction type of thing.
Right. I agree. And, it's a fascinating market to track. I mean, I think we're pushing 2 million auction prices now for these 35 years. And it's, or actually, no, it's pushing 3 million. But it's, there's little ups and downs. So, Saturday, in the same state of Ohio where we saw those New Holland tractors sell real well in that Kinsey planter, there was another sale. Greenville, Ohio, a great auction company, Bussey Auctioneers, had a consignment sale. Now, they had 48 skid steers on that auction. So
48 skid steers?
48 skid steers. Wow. So anytime you're selling 48 of something, you know how that goes, Casey. It's like, oh, hey, knock your socks off.
Yeah.
Tell our Machinery Pete salespeople you got to sell 48 of these things and see how they're so good they could probably do it. But anyway, there were a couple of really late model ones that caught my eye. And by the way, Bussey, great auction company. They're good folks. They had a 25 model Deere 333, a Tier P. I think it's the first one I've seen hit the auction market. Only had 9 hours on it, like new. I brought 81,000. Now I don't know what the retail number is on that. Skid steers in general.
Yeah.
The auction pricing is not as hot as it was maybe 18 months ago, just a little off. But there was also a 24 model Bobcat T76, 31 hours. That brought 72.5, and that was the second highest auction price. Of course, it's like brand new. But the highest I've seen was 75,350. Now, again, talk about timing. So I said about 18 months ago they were stronger. So back in, it was February of 23, so 2 years ago, Big Iron had one out of Kennard, Nebraska, T76, with it was a 21 model. So it was 2 years old at the time, with 213 hours, brought 75,350. That's how hot the skid steer market was 2 years ago. And on Saturday, a 24 model with 31 hours went 72.5.
Right.
So again, all these different markets, skid steers, hay equipment, 3-year-old tractors, they're all kind of doing their own thing, and judged against inventory levels that dealers have and farmer checkbook reality. So skid steers maybe a little better buys now, but it's interesting to track it
for sure. All right, Greg, probably a good place to stop. Folks want to reach out to you and get you to come speak at their event. Easiest way, just go on to machinerypete.com and click the link up top.
Yeah, there's an email link there. Drop a note to our team. They'll get a note through to me, or shoot me an email direct. It's just greg@machinerypete.com. Hit me on Facebook or Twitter, X, whatever. I will be heading out to an auction next week, Casey, on the 30th over in Merrill, Wisconsin. Some construction equipment.
Oh, right.
By Integrity Sales Auction, a great company where we're working more with. So I'm excited about that. We'll get some YouTube video on that one, so it should be fun.
Yep. They got some wheel loaders and that kind of stuff on there.
I think so. I haven't memorized the sale list yet, but anxious to get over there, and they're really growing over there with that company. So I'm excited to kind of watch the auction and also tell their story, what they got cooking over there.
Yeah, that's the this time of the year you usually see some wheel loaders show up on feedlots and those kind of things coming out of the auction marketplace.
Yeah, we've had seen some really low hour wheel loaders too. I'm thinking of some Case 321Fs, I think. So yeah, check out machinerypete.com for those prices, folks.
Right on. Well, Greg, appreciate you being on. We'll catch you again next time.
Sounds great, brother. See ya.
Right on. Hey, stay tuned for more Moving Iron podcasts after these messages.
Well, there they are, mocking you.
See you next year, loser.
That weedy area that's got you thinking, man, I hate that spot. Wish I'd sprayed better. Get the last laugh with a sprayer upgrade from John Deere. Precision upgrades that can increase your sprayer's performance, like ExactApply, advanced nozzles to give you more control at more speeds. It's just one of the many precision upgrades you'll find at johndeere.com. Now, let's see who's laughing.
Hello, welcome back to Moving Iron Podcast Markets. I got Chip Nellinger from Blue Reef Agri Marketing on to talk about what's happening in the marketplace. Chip, how you doing this morning?
Hey, doing well, Casey. How you doing?
Doing good, man. Doing real good. We have got been watching the corn market over the last, 2.5, 3 weeks. We saw a nice run back up from the mid 450s up to now we're up in I think this morning I looked at it, we're down under 480 on the front month, but we went into, looks like some technical stuff there on the corn where we were kind of hitting that 483, 482, 44, something like that. And you keep seeing it coming back down. So we hit some technical stuff there, but the corn market and the soybean market both have kind of gotten beat up because of where they're at, this whole China thing, the China trade thing. There's been talk that maybe some of I don't know if he's actually come out and said or not, but some of Trump's people might have been saying that it's back off on this China thing a little bit. And we're seeing a little bit of movement there, but I guess as you're looking at these things, what are your thoughts?
Yeah, a lot of volatility, Casey, and a lot of uncertainty out there. I think you hit the nail on the head, right? We have the tariff situation that obviously the markets, are very uncertain about. We've got some planting progress that's been made in some areas, really good planting progress. We've got other areas that have had too much rain and flooding. And here just recently, the last couple of days, the market seems to, I don't know whether this is real or perceived, but the financial markets for sure, and the way the bean market has been acting, there's some talk and rumors that there's going to be some sort of relaxation or de-escalation, maybe is the better word, in the amount of tariffs to China. And so again, I don't know. We've seen this in the past, right, where a news story takes off and it runs for a day or two, and then you get someone in the administration or President Trump himself refuting it, 180 degrees in the opposite direction. So I don't know. The financial markets, the stock market feels like something has changed. Strong day yesterday, like a 3% move overnight here in the stock market, and the bean market has been, pretty resilient here too the last couple of days. So that's always underlying this. You can at any moment wake up. Could be overnight, could be during the session, see a tweet, see a news story relating to trade, relating to tariffs, and, really fly these markets, in weird directions. So that's kind of where we're at. We're in that weird time of year where we're trying to get the crop planted. So weather matters. Some people need rain. Some people don't need rain. There has been a fair amount of activity, Casey, in planting. And I think maybe that's why corn has relaxed just a little bit the last couple of days. We're ahead of the pace we need, or ahead of average anyway. I think we were at 12% planted nationwide. That's probably delayed a little bit because there was some tremendous activity, particularly in parts of Western Illinois, Missouri, and Iowa. So I would say next Monday we're going to catch back up and remain above the pace of average on planting in spite of some rain around in some areas here.
Right. You would think that the planting progress thing would almost be a non-factor unless it was so far out of whack. Because, you'll watch really be down by 50%, and everyone's like, oh, my God, we're not going to get things planted. And by Sunday, they're back to 94%. So, it's just it's amazing how fast they can get stuff planted.
Yeah, and with Twitter and the news flow now, or X, I guess. I don't know if I'll ever be able to not call it Twitter. X. The information flow is so rapid, and to your point, these high speed planters going 9.5 miles an hour. As a nation, we need about 5 days to plant the corn crop. So it's hard to talk up delays. Although I would tell you, there's pockets in the mid South and Delta and Southeast that have had far too much rain,
Yeah.
and you're kind of getting towards the window where they need to be making decisions. Do I continue to plant corn, risk the heat of the summer during pollination, or am I going to switch that to beans? Am I going to switch it back to some cotton? Am I going to take prevent plant in some cases? So there are some areas where that weather does matter in the South. But to your point, across the I-states, the Dakotas, Nebraska, we can just get this crop on the ground so fast with today's equipment and planting technology that it just does not take much. Blink your eye and this crop is planted.
Yeah, for sure. Well, let's talk a little bit about the weather, what we see there. Reports have come out. NOAA's put out some long-term weather forecasts that look like the Western Corn Belt is back in the bullseye again. Out where I'm at in Western Nebraska, it's been abnormally dry even for us, and it's you see that creep kind of all through there. If you look at the drought map, drought monitors, those kind of things, the only places that are not a shade of yellow or orange or brown now are the ones that are underwater, right now. So that's the bad part about where the situation we're in. There's two extremes. Either you're getting way too much or you're not getting any at all. I guess as you're looking at this weather thing, how close are we to the market saying like we have a weather issue right now? And how far away are we from really seeing some big rallies in the marketplace?
Yeah, I mean that's always the question. I don't think we're quite there yet in the market's mind. To your point earlier, the market assumes we're going to get this crop planted, right? And because of the technology and how fast we can plant it. But last Friday, I believe it was, NOAA put out some long-range forecasts into summer and still showing, kind of a line. If you draw a line through maybe, St. Louis up to Chicago, everything, south and east of that looks like it's, more normal temps, normal rainfall type situation, much like we've seen so far. Everything to the north and west is in that pocket where they're still forecasting above normal temps and below normal precip. And so as you look at that drought map, there's just no subsoil moisture profile in the Western Corn Belt. They've received a few rains around here, but it's so dry. It's like a sponge, right? A few drops of moisture on a sponge isn't going to fill it back up. So it's not a stretch in my mind to think that the Western Corn Belt, everything west of the Mississippi, particularly Iowa, Nebraska, the Dakotas, are going to potentially be on that razor's edge all summer long with, do we get the right rain, right? You can still raise big crops in that type of environment, but you've got to have really regular, timely, good general rainfall because you don't have subsoil moisture to draw on. So if there's any extended period, 2-3 week period where it does get hot and dry, that Western Corn Belt could have a real problem. So I don't think we're quite there yet. I think that is something that supports the market on breaks going forward until we get to that July-August timeframe and look at getting this crop pollinated into the grain fill stage on corn. There's still really good demand under the market as well, on corn especially. And I think that will help support us is that unexpected or that potential weather problem because of the drought map the way it is and that long-range NOAA forecast that continues to show hot and dry for the Western Corn Belt. So it could lead to some massive volatility. Now, if you get to about the end of May, first half of June, and that drought map hasn't been fixed and there hasn't been some more general rainfall in that Western Corn Belt, then I think the market starts taking notice and really focusing on that 10-day forecast, and you could add some weather premium very quickly. But until we get to, late May, early June, I think it does support us on breaks, but I don't think you see that massive amount of buying. You get to the middle part of June, and we're still, and those NOAA maps are starting to pan out, meaning the Western Corn Belt's hot and dry, and you could see some explosive fireworks, especially in the corn market, because there's no margin for error with the way the demand situation is right now. We need 181 bushel national average yield to build carryout And if we're under that, if we're 5, 6, 8 bushels under trend line, all of a sudden you're talking about a really tight carryout situation that probably supports something well north of $5. So that could be where the volatility comes from, but probably not until that early June timeframe at the earliest.
Yeah. All right. This is kind of one of those crystal ball questions, so get ready here, Chip. But if you're looking at prospective acres came out, we talked about one of the bigger corn crops we've ever seen. As things sit today, as you're looking at that number, how confident do you feel that the U.S. Corn crop will be planted at the rate that people said that they were going to plant it at?
Yeah, I think that's a debate that it seems like we always fight this out, especially in a little bit wetter year and or wetter springtime. So there's two camps, right? There's one camp that says, boy, we're ahead of the pace on corn planting. Historically, when you plant early and you make good progress, farmers like continuing to plant corn, and that corn acreage number expands. But this year, you've got that pocket in the south, the delta and southeast, that have been too wet, and they need replant. What did get planted, a lot of it needs replanted. They're getting late in the window. You also throw in this whole situation where the last two payments that farmers received, one going back to Trump's first administration when we got tariff payments, it was more heavily weighed to corn. And so there's that theory too, that if farmers happen to be, now I don't know that I buy this or that a lot of people do this, but if you're farming for a potential tariff payment, maybe that could lead to more corn acres because you get a bigger payment. I mean, percentage-wise, it's a much bigger payment than beans or wheat. So, I think it creates this uncertainty that probably the June acreage report doesn't answer fully. In a year like that, you need to get to the January crop report to figure out what we really did plant. That June acreage report just usually isn't quite timed well enough to catch any late changes. So I think that acreage thing is going to be something that the market kind of kicks around and battles, unfortunately, until the January crop report well out ahead of us.
Right. Yeah, that's the flip side of that too. Is it's just we'll see, like you just talked about. We got to wait all the way to January to see what truly came of it. So it'll be interesting to watch.
That's my hot button. I don't know. That's my least favorite report of any of them. I just think a couple tweaks on acreage. Farmers have to report their planted acreage. If there is prevent plant or switching, that's recorded. So I don't know why the RMA we don't change the dates of these acreage reports. Use more RMA data, and you'd have a very accurate reflection. Maybe push that back to July 15th or something, and we'd have the number. But again, I didn't get that phone call from Washington asking me my opinion on how to fix things. So, yeah, and I'm not holding my breath on it.
You're not on USDA Brooks.
I guess not. Although a few years ago, I did have somebody from the state Department of Agriculture reach out to me via email when I was a little bit rough on. I think it was exactly this. So
yeah,
I never. I guess it doesn't fall on deaf ears, but I think their attitude is if it's not broke, why fix it? But yeah, in reality, I think it is broke, is what I'm saying.
You're on a list now, Chip. That's not.
I was already on many lists, Casey.
Right on. Yeah.
I just got on 10 more, though, I'm sure.
All right, let's jump over and talk about what's going on. Two things I want to talk about. One is what you see happen in the cattle market, and then what you see on the energy side. Let's start with the energy first. You see where oil is right now. It's kind of bouncing around. It's done this weird cycle over the last couple of years where you'll see it kind of stay in a band of the 60s or the 70s or the 80s, and it'll kind of fall back down and kind of move its way back. Right now, we're looking at oil in that low or high 60s, low 70 range. It just seems like oil can't get things to move in any real direction other than just kind of a sloppy trade kind of going sideways. And then you'll see a run up or a run down for a little bit. But I guess as you look at oil right now, what are your thoughts?
Yeah, I mean, I think that that's one of the big drivers of why inflation has ticked down a little bit, has been the energy side and oil. One before the election, that obviously was in Trump's first term, was all about drill, baby, drill, right? And get self-sufficient on energy production. So that's obviously a big focus of this current administration as well. So I think but you can't do that in 2 weeks or 2 months, right? It's only been, since January that Trump's been in office. So that takes several months to a couple years to get that production back, right? And so I think that's the trend. I think if most people, in the industry, if you held a gun to people's heads, they'd say, 55 to 75 is probably a healthy range to be in. You get over 75 and certainly north of 80, and you're fueling a lot of inflation and issues. You get under 50, you got some problems where it's you're taking production back out of taking wells in production back. People are pulling investment back, and so I think we're probably in an okay range right here. But I do also think that it's going to kind of drive and coincide with the outside financial markets too. The last 2 days here, we've had a big snapback in the equities markets, and so either the jury's still out. You get one camp thinking these tariffs are going to be wildly inflationary. You got another camp saying no, if we can get some of these tax cuts and the fiscal side of this together with the tariffs, that it doesn't have to be inflationary. So I think there's a wild amount of uncertainty in all these markets, and all that does is add some fuel potentially out there to some big moves. Not only that, you've got these talks in Iran, and we've got this Middle Eastern situation that always could flare up at any point in time, and add $15 to the crude oil market in the snap of a finger if something flares up in a bad way over there. But right now, I'd say that if the one thing maybe that's going the most right in this current administration has been this tick lower in energy prices and gas prices, and I think that's driven the CPI down a little bit. It doesn't seem to me like food prices. I know eggs have come down some, but in general, food prices haven't come down. It's been more on the gas side, and that's kind of a tax cut in its own right. To people here in the United States if they're paying less for gas. If we can get food costs down a little bit, then people are going to have bigger smiles on their face real quickly, if that can happen. But so far it hasn't, in my opinion. Going to the grocery store on occasion, I don't go every week, but when I go, I'm like, geez, got 2 bags of groceries and it's $162. What's going on here?
Yeah. Well, speaking of food costs, you look at where cattle prices have been and cutout prices have been, those kind of things. We've talked about this, I don't know, since COVID, that, we're going to see this, or, price of cattle got to drop sooner or later because the, demand and what it costs, those kind of things. And it just hasn't happened yet. So I guess as you're looking at the cattle market, what are your thoughts there? And right now we're heading back into grilling season. So now it's a whole nother upcycle in just the overall demand structure. So I guess as you're looking at the situation, what are your thoughts there?
Yeah, still a very bullish situation. Obviously, we have not rebuilt that herd from multiple years of drought in the West, and still arguably still in a drought, right? Kansas, Oklahoma, still very, very dry. The Northern Plains, very dry. And so there were maybe some hints in this last cattle on feed report last Thursday, I guess, that says maybe we're starting to retain some heifers, but probably not in a big enough way yet to move the needle. This thing, when the bubble pops, it will be ugly, and it will pop. I don't know if it's, a month from now or 13 months or 18 months, but it won't end well, right? And so it doesn't look like we've lost a lot of demand yet. Now, you can kind of say the tariff situation, we've seen Hong Kong and China back way away from our exports, obviously. I don't think the cattle market's given that enough thought or power yet, because the cash market just continues to rally up, and we're threatening now to make new highs again in cattle within a lot of these contracts are very close to making new all-time highs again. So still a very bullish situation, but I tell you what, as a cattle producer, just so much money and equity on the line, you just have to be really diligent, because when the shoe drops, it will be fast. It won't be you won't be able to catch it. So unfortunately, you have to just stay really diligent at a time where you're like, this thing's going 220, 230. It's going higher. Why would I have to worry about it? But I can tell you from experience, from 30 some years of experience, when this cattle market turns, it will be bloody. So as a feedlot, as a cow calf guy, just stay really diligent about your risk management, whether that's LRP or puts or some sort of downside protection. I think is critical, because the amount of equity at stake is unprecedented, and it's been a good run up, but boy, when it turns, it will be bloody quickly.
It's amazing how fast it can run down, isn't it? It doesn't take long.
No, that's the old saying, right? The escalator up, the elevator down. So it's just the way the markets work. A lot of psychology to it. Doesn't matter what market, and it could be bonds, stocks, currencies, cattle, corn, gold. Gold's going to be the same way. New all-time highs, and it just kind of goes with the other saying, right? The cure for high prices is high prices. The cure for low prices is low prices. And the reason for that is you get high enough, you choke demand down. And if that comes at a time where we start building the herd a little bit, and it doesn't have to be from building the herd. We've done a lot of, I'm not going to say damage, but we've shifted the herd to where this dairy situation, we're pulling a lot of beef out of the dairies, right? And that's been, and crossing, Angus with the dairy side, and that can build supply right there without much of an increase in the actual herd. So if you get all these things, production creeping up a little bit, demand getting cut a little bit, the dynamics can change in a hurry, and the funds drive it, right? The money flow drives it. Funds probably aren't quite at a record long. They have pared that back a little bit with all this tariff and outside market volatility of the last month or two. But when the funds decide they are done being long cattle and they've squeezed all the money out, based on the risk parameters that they take, just the sheer fact of them getting out of those longs and taking profits, can drop you $15-20 very quickly.
Yep, for sure. All right, Chip, appreciate you being on the podcast. So folks want to reach out to you at Blue Reef Agri Marketing, what's the best way to do that?
Yeah, best way, just call our office. Our main office is in Morton, Illinois. We have 4 other branch offices throughout the country, but main office is 309-550-7213. Love to chat with you. Busy time of year, but it's certainly not time to take your eye off the ball on these markets and the risk that's out there.
Chip, thanks for being on. We'll catch you again next time.
All right. Thanks for having me, Casey.
All right. Stay tuned for more Moving Iron podcasts after these messages.
Looking for more accuracy, more productivity from your current planter? Let's get exact with precision upgrades from John Deere. Start with Exact Emerge and get accurate singulation and spacing at 10 miles per hour. Or choose Exact Shot to promote early root growth and cut fertilizer costs. And with Furrow Vision, save time by verifying seed depth right from your cab. Visit johndeere.com/planner upgrades and see why nothing runs like a deer.
Hello, welcome back to Moving Iron Podcast. I got Aaron Fennell back on here to talk about what's happening in the marketplace. Aaron, how you doing?
Terrific today, sir.
Good. So before we get started, we always kind of run through what we're going to talk about and have a little chit chat back and forth. And, I think there's 2 things on my mind right now that I think are worth talking about just because of where we're at. We're pre-EOP, right? A lot of order writing periods that are opening up here soon, right? You have some that are open now, depending on your manufacturer and those kind of things. But tis the season for order writing for 2026 delivery, right?
Right.
And so basically that time frame runs between now and, into October, September time frame, depending on the manufacturer. They all kind of overlap with each other, but they all kind of fall in between basically February to end of September, early October time frame, depending on what's going on. And when I say
Unless
that,
things get really wild, then they start shutting them down about August or so.
yeah. And
I don't know that this year they're going to do that.
I think they'll probably have too much of an issue doing that.
Regardless of color, but it has happened.
That has happened. And when I'm talking order writing periods, everybody has a phase, multiple phases within those, and the
Discount level,
discount
stair-step.
levels and stuff like that. So when I'm talking the first phase is when you get the most discount, and
Yep.
once you get outside that first that phase, I mean, it's typically over. I mean, there's some folks that'll come in. This is one of those years too, where someone wants to buy something new. A lot of people wait to the last minute, and the few percentage points that we're talking, 1 or 2 or 3 percentage points on some of the stuff may or may not be a trigger for someone to jump in and buy something. It may just
Right.
be the timing of when they're able to say, yeah, we'll do this now. And that's what we're seeing, I think, in situations.
Right, and that kind of coattails on with what we've talked about here a podcast or two ago, the substantial amount of last minute buying.
Yep.
And something we didn't really, I think we might have touched on it a little bit, but not to the biggest portion of it. At least I didn't. A big factor in that I didn't even mention or think about at the time. A huge driving factor in that, getting renewed.
Yeah.
That has been a process
Yeah.
for a lot of guys this year.
Yeah,
And that has just shoved everything back. And it's kind of a two-edged sword, as you know. If you went and got that end of the year deal because the accountant says I need it, I don't care if it's 0%, it's $450 sitting on the balance sheet.
Right.
And we got that meeting in January. Better wait.
Yeah.
Let's wait a minute. It'll still be there. And unfortunately, they're all right.
Right. Yeah.
So that's had a huge factor in it.
Yeah.
Not to jump all over what you're talking about, but just to reiterate the last, I've never, in all the years of selling machinery, 25 years, I've never seen this.
Yeah.
Big ticket. I need it in the field tomorrow. Bought today.
Yep. That is you're exactly right. And the flow of where things are at right now is it's just that, right? I had this conversation with a guy last night. I was talking to a guy about just some business stuff. And I was like, this is the time of year when, and this is the kind of economy where the banker has more pull than people realize.
Oh yeah,
It's kind of like the old joke. Like I always tell people, like, "Oh, my house is paid off." It's like, well, don't pay your taxes and tell me who owns your house. And it was, it's one of those things. It's kind of one of those same situations, but.
Hey, hon, check the Christmas card list. We did send him cookies, right?
Yeah, but they had the thing about this time of year is that there's always different manufacturers have different new models coming in, those kind of things. And the one thing I've always kind of paid attention to was the cycles of how these new models fall in. And depending on manufacturers, anywhere between 4 and 6 years is typically the stretch of which those things happen. And whenever those machines come out, there's typically when the new model shows up, there's a bigger than normal price increase that comes into there, and then that kind of trickles down, and you see it kind of pop back up, and then kind of so on and so forth. But as you're watching these things move through, what I've always cautioned guys to do is, pay attention to when those new cycles or those new model years are coming in, and start looking at when and where do you want to play in that, right?
Right.
And the last thing that I always wanted to have a guy do was it's hard for me to sit there and say it's a really good move for you to go and buy a machine that when you trade it back in, it's a 2-year-old machine, even though you got 1 season on it. And
Right.
the way all that stuff comes into play and the price increases and how you got to weave that in, usually that's
Welcome to every tractor deal the last 3 years, by the way.
exactly right. That was last 3 years you were getting weekly price increases. So I mean now you got now you're back to normal. The thing when you're trying to weave that in,
And 6 months became 18. Don't forget.
exactly right. There's times where you can sit and say, hey, you know what? It makes sense for my operation to do this. Just get this machine
Right.
out. My thing has always been, if you're going to do that, you have to almost look at it like, hey, here's a 1-year-old machine that is, that when you trade it back in, technically it's going to be a 2-season-old unit, right? Even though you only got one on it. My rule of thumb's always been, if you're going to do that, you need to run it till it's 3 years old, right? And then trade it back in, because then you've overcome whatever that's the situation is that you're looking at. Because now you start looking at, and this is something I like to play a game with too, was, hey, you have a 3-year-old machine that's got 2 seasons of use on it, and the hour range that you're looking at is compressed comparatively to what other 3-year-old machines would look like, right? So you've got instead of like typically you might see a 3-year-old machine that's got, I'm just gonna throw a number out there, 1,000 hours on it or whatever. That means you put 333 hours a year on it. Well, if that average machine is 1,000 hours and yours comes in at 600 or 700, it shines a light on it in a different spectrum that kind of helps. I'm not saying it appreciates in value, but you don't see the depreciation scale as tight as you would on that 1,000-hour machine.
Yeah, I would agree with that for the most part. My brain kind of started thinking there when you were talking about your 3-year window kind of thing. If you go back from right now every 3 years, there's a lot of truth to that, Casey. You go back to 22, completely different market.
Right.
19 ahead of that, drastically different market.
Yep.
16 ahead of that, little different, a little more. 19 was definitely more solid than 16.
Oh, sure. Yeah.
And before 16, you had 13.
Yeah.
So out of your 12 years there, you got 2 mountain peaks and a real big 2 gorges. This one and the 16.
Yeah.
So, I mean, we talk more so kind of like in 10-year cycles, 5-year cycles, but it's funny when you mention that 3-year thing to go back and just think about right now, right away, the last 12, the last four blocks of 3 years. And that holds a lot of water, man.
Yeah. Well, you look at cycles inside of cycles, right? So you talk about a 10-year cycle all the time, but my 10-year cycle is made up of a 3 to 4 year. Oh man, this is the best day ever, and it's never going to get any worse than it is right now. This is the best day ever, right? And then you've got this like 3 to 4 years.
Every day is February 22.
That's right. And then you got the next 3 or 4 years in there. That's the cleanup, right? And you got 3 or 4 years of stability, and then you go back through it, right? So, I'm talking about a 10-year cycle here where every little thing inside of it has a little cycle inside of it, but the cycles are based around where you're at now. All that being said, coming out of COVID, that particular time frame was unlike any other time frame we'd ever seen before, just because of the situation that was there. But what it really highlighted to me was that was a very, very compressed, right? I mean, really, the COVID run was 21 and 22. It really was a 2-year run, because 2020 was still like everyone's like, I'm not for sure, and we're still selling a lot of tractors, and we're just gonna play. And all of a sudden, the supply chain thing just went to hell in a handbasket, and that was what really drove up the marketplace.
We can get tractors, but not steering wheels.
That's right. That's right. Yeah.
What?
That's crazy. We can make a tire, but they're going to be biased tires still. We're taking out the still regular.
All we can get is R3s. Will Diamond Tread work?
But if you look at how that played out on the backside of this too, that compression time that we've seen was all 23 and 24. and of this true like hardcore watch the market crash. And now we've leveled out. So we had a year and a half basically of amazingly awesome profitability, and then you gave it all
About a
back
year and a
about
half down.
you know, and now we're kind of leveling out, right?
Because the very beginning of 23, you could still see the rainbow and the unicorn, but boy, they were a long ways away on the horizon.
They were, yeah.
But you could still feel them a little bit.
Yep. And if you watch the other turns and how things happened, like use 2008 for example, the Great Recession, right?
Right.
Now, the ag marketplace was a little bit different than the rest of the world. Right?
It was climbing.
It was climbing, and all the manufacturers shut down, and you saw shut down, but they really contracted what they were making. Right. And if you watch 2009 and 2010, the lack of new equipment drove up the price of used equipment. And, you know, that's the first time you and I were sitting there talking to a sales guy, and I was like, we're going to give this guy back 125% of what he paid for these things. And maybe we're still too low in the marketplace. You know what I mean? Like we could be off still. And we watched that take off and run. And that time frame from 2008, 2009, 2010, 2011 was, I would consider to be the peak. And then from there it starts to slide down. But record equipment sales in 2012 and 2013, which we all saw. I mean, I remember sitting there going like, we really need to pull back in 13 because, you know, things are really slowing down. But the commodity prices are still high, right? So
right.
A typical order writing period, producers are looking at, hey, you know what, this is what we did, and we've got this kind of profitability in the farm now. We're going to make our orders for 25 delivery. We got the money to pay for it, so that's what's going to happen. And then, you know, the commodity prices slide, and then they pull back again, and for the next following years, you know, order writing period, and that's what we saw happen in that time frame. But again, 2008, 2011, things contracted, and then started to get better. And then you had a 3-year run, 11, 12, 13, and then 14, 15, 16 were, you know, bloodletting, and then you had, you know, 17, 18, 19 were all stability years. And then, you know, I think it's hard for me to ever put COVID in the conversation that during that time frame.
It's such an oddity.
Well, but even because if COVID wouldn't happen, I don't think that the market would have changed all that much, right? I mean, we had record on-farm profit. We had a lot of government subsidies that were thrown in there. So just, you know, a lot of cash floating around. And then you had scarcity in the marketplace, which then, you know, drove up prices and everything else in there. So it was just
scarcity
like
premium.
Yeah, scarcity premium. It's like one of those things where you had it's like a perfect storm. You know, everything hit at one time that could have possibly hit. That would have then the downstream effects were, well, you know, we're dealing with them now. So
the very same items that carried a scarcity premium now carry a glut punishment.
Yeah, that's for sure. You're exactly right.
Exact items.
Yeah, those things were all the factors in which they played in had a big role in.
Oh yeah, definitely. The only thing I would say you're right, Casey. I feel like, you know, in retrospect, hindsight's always 20/20. 14 through 19 was all kind of the same. The difference is once we were on the floor in 16, we figured out how to work within it for 17, 18, and then 19, we see a tick,
right?
A couple ticks. And then somebody ate a bat in a lab and everything went haywire. So
allegedly. They had, which then leads to the backside of what this looks like. And we've talked about this on here before, but when you look at that, I think there's two sets, and I talked about a little bit about this with Shady Pete earlier, but as you're looking at marketplaces, I think there's two distinct marketplaces. And when you start looking at used equipment, one is that 1 to 3 year old market. And then you have kind of a spacer, if you will, between 4 and 5 year old machines. And then when you get past 5 year old machines, that 5 plus, you know, 5 kind of dips its toe on both sides of the pool. You have a different marketplace. And what I've always found is that when that 1 to 3 year old stuff is really selling well, the economy's great, right? when you get to that 5+ stuff and that stuff's selling well, typically the economy's a struggle. And the reason I think that stuff sells so well is the equity that people have in equipment that they're trading in does two things. One, it either covers the down payment and their banker's fine with that, or that puts them in they have so much equity in the machine they're trading in that it puts their debt to asset ratio in such a spot that it doesn't really change the balance sheet, and that makes the banker happy. And I think that's what drives some of this. We used to talk about this 10 years ago, where it was the $50,000, basically under $100,000 piece of equipment that was sold during this time frame. Well, today that's a $250,000.
I was just gonna say, machine. What used to be under 100s now, if it's under 250, it's have at her.
That's what we're at. But as you look at those things play out, that's what we're seeing right now. You look at strength of the auction marketplace, it's that 5 to 7 year old stuff. Basically, if you're talking about a tractor, you're talking about that 1,500 to 3,500 hour machine, right? Up to 5,000 hours, probably. That's where you're seeing that real churn of inventory right now.
I would even say you can split that year by year if a guy wanted, but you could even say 1 to 3, 4 to 7, 7 to 10.
Right. Yeah.
And you're right. That 4 to 7 is a crapshoot in every economy, because, and I would argue with you a little bit to the point of when the ag economy's good, oftentimes that 1 to 3 can be skipped for new.
Yeah, true.
Now, that's good. I would say when it's steady, 1 to 3 is moving.
Right.
A steady market, not to sound weird, but in a steady market, constant market, buyers are in their own lane.
Right.
You don't have the 1 to 3 jumping to new, or the 1 to 3 jumping down.
Right.
Which can happen too, which has the last couple of years.
Right.
He had a 1 to 3 5 years ago.
Yeah.
And now it's got, I've traded guys same model, just hours.
Right.
Which is kind of back to the guys have been patching. And, I'd love an 8R 370, but I can only afford to de-hour my 8370R.
Right. Yep.
There's a difference there.
Yep.
And those two used tractors in the marketplace have a hell of a gap between them themselves.
Sure. Yep.
So you see a lot of that right now, which plays into what we talked about. But when guys are in their lane, it's always, to me, that 4 to 7 that can be the strongest pot or the most empty.
Right.
And I think it is where, if you will, which way the minnows in that bowl are swimming is a pretty good indicator.
Right. For sure.
If your 5-year-old buyer's buying a 2, things are up. If your 4-year-old buyer's buying a 6,
yep.
And not that you can't, spend a month in the business, what's going on,
sure,
up or down or whatever. But
yep.
Just, as we're talking about little indicators and things to watch,
yep,
how things play out, I think that's a big one.
Yep. No, I think you're right. Those things like that, paying close attention to what's happening in the marketplace, all the things you see happen out there, all of that stuff makes such a swing in the marketplace, which is important to make sure when you're going out to buying something. Just like buying a car, like I couldn't tell you what my truck's worth until I'm ready to buy a new one, right? And those are all things that I'm going to pay attention to, and I think that's where you're at here. I think long story short of this is if you recognize where you're at in those things, in those marketplaces, reach out and talk to your professionals at the dealership about what they're seeing happening, and start having those conversations with them, because those are all the things that are going to make the thing out there. Also, pay attention to what's happening in the auction market. Those are all indicators as well as of what's happening too. So pay attention there. So, well, that's probably a good place to stop. If folks want to reach out to you and get more information about what you're doing, what's the easiest way to do that?
Call me or text me, 308-760-1193, or shoot me an email, afintel@21equip.com, or I'm on Facebook and Twitter also, or X. Facebook and X.
It's the X. Yeah.
Pretty soon it'll be, I'm on Meta and X, and everybody will be like, what the hell is that?
Yeah. That's we're cruising ever
Still
closer.
I think I still got a MySpace profile out there too, if you really want to get to digging.
Is it even up still? You still go to MySpace?
I would assume it's probably on the darc web now, so don't go looking.
Don't go looking like you have to, right? Right on. Well, I'm Casey Seymour. You can find me Facebook, X, Instagram, Twitter, TikTok, all those at Moving Iron Podcast or Moving Iron LLC. You can find me on LinkedIn as well, at the same places. You can find this website, or we'll find this website. You can find this podcast on AgWeb. The audio side of it, you can also go to Farm Journal YouTube channel to see the video version of this, and you can check out all the fun stuff there. If you are interested in what's happening in the marketplace, by all means, reach out to me. I'll be happy to answer whatever question. So's Aaron. Answer whatever question you have. Greg's, obviously, he'll answer any question that you throw at him. So check those out there. And if you have stuff that you're looking at or ideas that you want to run by somebody, by all means, feel free to reach out to us. So with that, I'm Casey Seymour with Greg Machinery, Pete Peterson, Chip Nellinger, and Aaron Fennell. Let's go move some iron, folks.
Thanks for joining us. We'll see you again next week. And remember, Moving Iron is available on Farm Journal's YouTube channel and anywhere podcasts are found. So until next time, let's move some iron.